presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to John in Orlando. John, what's going on, brother?
Good afternoon, Tom. How are you?
I'm doing great, man. Yourself?
Good. I'm going to tell you, I've been listening to you since your radio days back in 99. Appreciate what you guys do. But what I really enjoy that you brought back Tim Ord. This guy is as smart as a whip.
I am so happy for that feedback.
Yeah, because he's one of a kind. He's got to be the number one market timer. I'm telling you, it's like he calls it really, really good.
He does. I really appreciate the feedback, man.
Yes.
Now, Tom O'Brien.
Good afternoon, everybody. We'll get those tigers growling and prowling. We got action in the market today, folks. A little volatility for a change. S&Ps, we kick it off. So why not with the headline, folks? Because the headline's driving everything. If you haven't seen it yet, no reason to meet President Xi of China. They were supposed to meet at APEC in 2 weeks. Yeah, I was to meet President Xi in 2 weeks at APEC in South Korea, but now there seems no reason to do so. Now, we know how this goes as terms the ebb, the flow of the negotiation that is always at hand. But nonetheless, folks, we got the S&Ps down by more than 2% right now, and you are basically sitting near session lows, and you better believe we're going to get some volume today. NASDAQ 100, how's that for a drop-off? 2.7% in the red, folks, 2.7. And we got almost 60 minutes to go in trading, 24,614. We're off 675 points, and you were slightly in the green territory, as in you're off about 750 points from where we were prior to that news, negative 2.7% of the session. Dow off a similar point basis as the NASDAQ, but off 1.5%, off 673 points, and the Russell off 2.3%, again, right near session lows. Day is not done. Going into the weekend, yields, we have higher price, lower yield. The 10-year right now, 4.06. On lower yields, you have a weaker dollar at 98.92 right now. And gold just holding up well above, I say just, but even when we got a stronger dollar, gold holding up well. We have some weakness just chopping around where we are. Gold looking to finish the week above 4,000 at 4,011. You jump over to silver, hanging on to some of those gains, but well off the highs of yesterday. We hit 49.96 yesterday. We're right now basically flat on the session, but positive by 15 pennies at 47.33 right now on silver. Now you jump over the volatility index. How's that for a spike? 2109. Right? We had a spike in August. You back it up to the spike in June. Similar spikes to where we are right now. But many times those spikes actually flare a little bit higher. And all things considered, okay, seems like decimation in the market. We've given back 2 weeks of gains. We have, right? Stairs on the way up, elevator on the way down. There's the description, folks. Anybody I've ever asked you what that means, pull up a daily of the NASDAQ, the Dow, pull it up, whatever you want, right? There it is. Stairs on the way up, elevator on the way down. We'll see. The market's got a lot of room right now of built-in exuberance. NASDAQ 100 just traded up 9,000 points. So, yeah, we're off by 700. We just traded up 9,000 points, okay? To give you a consideration of what type of a pullback would just be a healthy pullback in this market, folks, let's take this one off for some clarity. NASDAQ 100 could just come back and test where we were at the beginning of the year. That'd be a 382 of the run we've had since April. 22,000, 2,500 points. That's a 10% pullback from where we are right now, and that would be a healthy pullback. And, yeah, I don't know where else you find on this chart, folks, okay? As in, technically, it's a one-way move of 9,000 points, no matter what index you pick. So, pick, if you're trading long-term, yeah. Okay, you don't need to try and time this market and sell. And, there's a lot of exuberance, rightfully so, with AI in the future. It's going to take a while to play out. We talked about all these circulatory risks of the deals getting done. So on a longer term basis, be very careful selling out of this market because, yeah, this bull market is nothing like, okay, the dot-com bubble. There are massive risks. But you're also talking about companies with massive cash flows in that same area, which we did not have. Short term, though, oh, you better believe there's a lot of risk in this market, folks. Okay, the S&P is just traded up 2,000 points. To be fair, you missed it by 20. 48.32 to 68.12. Okay, 2,000 points, which is a remarkable acceleration for an index like that. And the reason why I stress is we're not stopping right now. We're at session lows in the S&Ps. We're at session lows in the NASDAQ, off 2.8% right now. And yeah, on a short-term basis, I don't blame anybody for getting out of Dodge if you've run that up. On a short-term basis, you better believe it, folks, okay? This has been an extraordinary run. The value created of these companies is astounding, to put it lightly. There we go. I was trying to go back a little bit further. You just had a run of 15,000 NASDAQ 100 points over a period of 2.5 years, and you just had a run of 10,000. So 700 points is not a big move, and you're seeing it happen this afternoon. So on a short-term basis, yeah, you better be very careful if you're in these trades on the long side. Boy, we got some moves, man, and it's not stopping. NVIDIA's off by 3%. It's a 4 well, they're not anymore. What are they now? They were almost going to push 5 trillion. You're at 4.5 trillion right now. For NVIDIA, you're back at 186, but hey, realistically, you're just back to where we were Wednesday morning, folks. Now, what's remarkable here is you had a little bit of a sell-off in the markets on Tuesday. Okay, the Oracle news, the margins, right? You trade higher, and then you get the news. And hey, if Trump wants to play hardball, the market's giving him a lot of leeway. That's what I found myself thinking coming into this week, saying, you know, the market has given him a lot of leeway to play hardball. And when you're talking about rare earths, which is what this escalates from, okay, yesterday you had China and rare earths issuing a note that, yeah, they're going to have controls over their rare earths. And that is their ultimate pressure point. And so you're seeing Trump push back today. So yes, he threatened a massive increase in tariffs on goods from China and to cancel an upcoming meeting in 2 weeks at APEC. One form of retaliation the U.S. is considering is massive increase. Massive, right? Many other countermeasures, I mean, these are direct quotes from the president, under serious consideration. Yeah. Yeah, and here it was. So Thursday, and this is the one, they widen rare earth curbs ahead of that meeting. Well, the meeting might not be happening now. So it's going to be a tumultuous 2 weeks leading up to that meeting, right? New broad curbs. So this is yesterday. This is what started it. All right, we'll break it down, but this is yesterday. New broad curbs on the exports of rare earths and other critical minerals. I mean, this is probably one of the most important facts that the U.S. is looking at here in terms of those negotiations. So the Ministry of Commerce said in a statement Thursday, this is China, citing national security grounds. So yeah, they've dug in. We've dug in now. And the market's digging into negative prices. S&P's just hit session lows, folks, in the last minute. It's going to be a wild finish. We got 45 minutes to go. Come on back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. S&P's off by 2.2%. NASDAQ off by 2.9%. How about that one, man? These are 5-minute bars, folks. We made lows in the last 5 minutes, 10 minutes, 24,555. And yeah, we were up there at 25,350. It's 800 points. 800 points from where we were at about 11 a.m. this morning in the NASDAQ 100. And yeah, you jump around to the heat map. How's that for a heat map, folks? Okay. Who's trading higher? Pepsi is up by 3.5%. Good old Mickey D's, man. McDonald's up by 1.2%. T-Mobile in the green. The CME group in the green as well. We got TJX up 1.5%. O'Reilly and AutoZone. What do they got going on? They got their earnings or something? They got something going on. AutoZone up by 2.8% right now. O'Reilly up by 2.6%. They got something going on. Look at these stocks. How's that one? AutoZone trading at $4,000. Yeah. This company, $68 billion company, AutoZone. My goodness, right? You jump over to O'Reilly, $295. This company, 800 and... Oh, that's Oracle. Excuse me. No wonder I was saying, what's going on? Yeah, O'Reilly Automotive. There it is. 86 billion. My goodness. O'Reilly and AutoZone, behemoths. Look at this channel, man. My goodness. What is remarkable, folks, is that every time, okay? So let's extend that one to the right. That's a weekly. We put it back on a daily, going back a couple years. You get above it, you get overextended. We pull back a bit. We're bouncing a bit. But yeah, put those channel lines. If you're looking at O'Reilly, folks, extend it to the right. You can see I haven't looked at it in a while. There's your 5-year weekly. Get a little above, get a little below, but a general idea of how these equities trade. But yeah. Boy, this heat map is something else, man. Can't escape tariffs, folks. Tesla off by 4.5% right now. Jump to some of the big ones. The bright reds. PayPal off by 6.5%. Some of the healthcare stocks. UNH off 3.5%. We have Robinhood off 7.25%. And it's how it works, folks. The equities that have dramatically run up are the ones that get punished the most when you get a pullback. Robinhood off 7.25% right now. We take a look at some of the volume on these equities. Well, we'll see. You're getting volume off the top, but look at these days on Robinhood we're coming into, man. You're coming into September 29th and 30th when you did 62 million and 50 million. We've only done 31 million. All right, Palantir, that is a big selling day. We had October 3rd coming back into that day. We're going to have some volume today as well. Yeah, these housing stocks are pulling back. Look at this. So Lowe's off 1.25%. Check out the weekly. Okay, looks like you're heading back to this area consolidation. That's a weekly. That consolidation for Lowe's went from March 10th to August 4th at an area right around 222, maybe 220 the low there. We're at 232 right now. The one thing that's encouraging on a weekly basis on this back off, look at the volume. Okay, you do 14.3 million on Lowe's. Markets keeps dropping. Not on today, man. 14.3 million. September 22nd, 13.5 million the next week, and we're at 11.4. It's going to be a big day today, I'm sure. Home Depot, you jump over. Home Depot off about 0.5% on a weekly, trading lower. There's your daily. Volume lightening it up a bit. You're not getting the acceleration you might anticipate if there was some real fear ripping out of that market. Let's jump around to some of the home builders. Yeah. They give up their gains. The home builders looking like they're coming back for one more test. Look at this week. So Lennar out there, you're positive, but boy, look at the volume, right? You accelerate lower, you catch a little bounce, and then again, we trade low with some volume on Lennar. Check out DR Horton. Oh boy, look at that one, right? From 176 to 151. Yeah. The market has a habit of getting ahead of itself, folks, especially when it comes to yields in real estate. And we got this entire ramp up thinking that rates were going to get cut. Everything was going to be rosy for the home builders, and that has not materialized just yet. Is the 10-year going to translate into the 30-year mortgage? Well, we're going to find out. We're going to find out if that becomes a third mandate for the Fed, because it just has not yet. We get the 10-year right now approaching 4%, folks. Okay, I'll pull it up. We're at about 4.05. Let's see what we're pushing right now. 4.05 on the dot, okay? The 10-year right now is at 4.05 on the dot. Traditionally, you get 30-year mortgages at about 2 percentage points above that. That would translate to a 6% mortgage. We don't have 6% mortgages yet, okay? Hasn't happened. There's been a dislocation to a certain degree. Mortgages are sitting at maybe 6.75, maybe 6.5. Maybe you can buy yourself down to about a 6% yield right now, APY on a 30-year mortgage, depending on what your credit rating is, your equity in the home, and what you're willing to buy down. You can get yourself a 6 handle. But we're not there yet. And what I do wonder about these home builders in particular, the market's okay. And the market will be okay. But there is this deal going on that there's going to be a supply that hasn't come in. And that will be one factor. I don't think it'll matter that much because, boy, you ever get mortgages down to like a 5.5? I mean, we've all been in the market, folks, right? What that would do to people's buying power when you talk about the monthly payment that they're paying for, you get it down to 5.5%. But we're not there yet, and the home builders are showing it, man. Lennar on a weekly basis trading lower. All right, back to this market. Now, this is a weekly, okay? You can barely see a rollover right now. Looks like decimation today. NASDAQ down almost 3%. Now, on a daily basis, yeah, it's going to be a big one, man. We haven't done this type of volume since April. That's it, folks. This is going to be the biggest volume day since April. All right, get your spikes up, folks. We got 35 minutes left to go in trading. You got the NASDAQ off 2.9. Who's going in long on the weekend? The tough part is here. That meeting at APEC with Xi, that was supposed to take place in 2 weeks. Hard to see how this rights itself by Monday. We're going to get 2 weeks of volatility. You saw the start of it right now. And the president has some room, man. He's got some room with where markets have put this market right now. Right? And yeah, tech stocks have huge exposure to China. China's not worried about... China's on what? A 50-year plan, right? A 100-year plan. So rare earth minerals, you better believe they're in play. And we'll see where we stop. S&Ps are approaching 200 points. Folks, we were trading above 6,800, and we're at 66.27 right now. Oof. Yeah, I would disagree, Peter. I would. We get 5.5% on a mortgage, folks. There are many people that are poised to take on a mortgage that can't handle it at 6.5%. And at the current prices that they're at, I think prices would move up if we get that number. I don't necessarily think that you're going to get the decline. You're not even going to get the stagnated, okay? Real estate prices, folks, have been where they are for like 3 to 4 years, right? We got that run up during COVID. They've been stuck. They've held up well for high rates, but they have been stuck. Yeah, no, it's great. We don't know. We're going to get to see it play out potentially. New Fed chair coming in May. We'll come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. And yeah, it's not stopping. Session lows. NASDAQ 100. We just hit 3% on the red. off 748 points. S&P's right now off 2.27%. We just hit 66.18 while we're on break there. Markets cascading. Dow off about 1.6% right now. And yeah, some of those mortgage rates, man, you jump over to it. Let's see. Just playing with a calculator. Let's see, 5.5. So, if you look at the numbers that you calculated, let's see. It's a massive decrease, folks, 1 percentage point in terms of your payment. And there's a lot of people, in the rental market right now, they can't afford the house. Okay? And those people are keen on getting in with new rates. Okay? So that is what I expect the driver to be. And yeah, everything's expensive, folks, but as I put in the den, so I was out with Tommy today. Okay? A large fry from McDonald's. Okay? This afternoon, we're running around hanging out. He's been so good. We got him a treat. A large fry from McDonald's. $5. Okay? A large fry from McDonald's is $5, folks. Okay? Housing prices are not going to drop if we get the rate. And I know, listen, this is my bias. That's my feeling. We'll get to see if it plays out. But there's a human innate characteristic, okay, that you focus on the negative. It's like, you remember the large losses, you don't remember the large wins as much. And of course you remember the wins, but you remember those losses to a certain degree, okay? And it sticks out in the same way that what do we remember most right now? We remember the prices of things right now. People are making a lot more money too, folks. They are. Okay, they're making a lot more money. That's how McDonald's is selling large fries for $5 a piece. No hamburgers, no drinks, large fry. Just some fries, $5. Okay, the wages have gone up dramatically since then as well. And you've now had housing prices stuck where they were on that first acceleration from COVID. Now, you did not get a pullback in housing prices, which many expected when the Fed went on their hiking. Okay, rates went through the roof, and what happened? Housing prices held up. Well, a lot of people predicted that would pull back. It didn't happen, okay? But guess what? We are now at a 3 to 4 year consolidation. Really 3 years, okay? You get that run up to 2022 housing prices, and we've had a stagnation for 3 years. Well, guess what, folks, okay? A lot of stuff is a lot more expensive, and it would be hard to imagine that we had a pull down of that area of prices at the same time you had rates, because there's a lot of people that want to get into a house, folks. I got renters. I have renters that are great renters, okay? And I say great renters as in, I'm talking about young couples, young people, young men and women around the age of maybe 30, right? They're coming in, they got a good education, they got a good job, they're making a good income, but they're not willing to make the leap, and I don't blame them, because housing prices are expensive and rates are expensive, and they're not making it. And those individuals in particular are poised to buy a house, okay? And they're paying good rents. I'm talking about, people paying $4,000 a month for some houses, okay? I'm talking about people paying easily $2,200, $2,400, $2,500. Now, that's not a mortgage, okay, at this day and age, depending on what you're buying. But, yeah, I'm talking about people paying $4,000 a month, $3,000 a month, okay? Downtown Tampa, downtown St. Pete, that want to buy a house that can't buy a house. And we're now, okay, folks, we are now almost 6 years. And we're really, you're talking about 5 years away from when everybody refinanced. And I agree, no one's ditching their 3% mortgage, okay? But we now have 6 years on that. 6 years that people have been in those, going back to 2019, realistically 5 years, right? 2020, 5 years or so. COVID hits March of 2020, folks. Rates dramatically dropped to zero pretty quickly. So we're at about 5.5 years. People have refinanced at that price level. Time keeps marching, okay? And eventually you're going to get either the ability for people to need to access that equity, or just that they want to, or that it's time, or rates come down to a certain degree. And look at this market, man. It's not stopping. Oof, we might see an acceleration, folks. All right? You're off 3.2% right now. And let's look at the volume on a daily because it's going to be a big one. We're already at about 800,000. Yeah, 800,000 contracts. And that's the biggest number since April. And we got the last 24 minutes to go in the market right now. All right, I don't think we're going to mess with limit down today, but you never know. We haven't had a day like this since April, folks. Look at this chart. Haven't had it happen. And what does happen here is that, and it probably won't matter, but you never know, okay? What's the possibility that we really get an exacerbated sell-off here? It's greater than 0%. And I use that all the time, folks. If you categorize something as greater than a 0% chance of occurring, you better make sure you have some type of a plan if that happens. Now, your plan could be, I'm willing to blow up the investment I have because it won't end my life if that happens because it's such a small chance, right? Okay, and you say if it happens, the investment I have in here, it's something that I can at least move on if it goes to zero. You don't do that with retirement funds, if you're retired especially. But what are the odds of happening? Well, we're off 3.2% right now. And actually, once you get into the final part of the day, there's no trading circuit breakers. Okay, so you're not going to get a pause when we go down 7% if we hit there. And like I said, I don't think that's going to happen, folks. But what are the chances of that happening? It's greater than zero. We're down by 3.2% right now, and we are at session lows, and you know how things can accelerate at the end of the day. Who's buying, right? Where are the buyers? The buyers haven't been there all day, folks. Look at this market. We're now down 3.2. Okay, keep that in mind. So you do not get circuit breakers for the last 20, 25 minutes or 35 minutes, I think. I think it's 325, and we're after that. Circuit breakers are meant to give the market a pause. At 7%, you get a 15-minute break. At 13%, okay, you get a 15-minute break. And then a decline of 20% from the prior day close at any time during the trading day. Okay, so that's it. You get to 20% and they'll pause it. But at the end of the day, they don't give you a pause because it's only meant to pause it during the day. Circuit breakers aren't meant to pause the market when you get there, 10 minutes before the end of the day. It's not stopping. NASDAQ off 3.3. We'll take a look at some individual equities when we come back, folks. Stay tuned.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We got the markets in red. NASDAQ off by 3.1%. And yeah, let's jump around to some of the equities. The big dog, we kick it off. NVIDIA off by 4%, 3.93%. We're basically sitting at session lows right now. All things considered, this is a 5-day chart. We're just back to where we were last Friday, okay? Excuse me, no, Monday. We're not even back to where we were last Friday. Let's back it up more than that. Yeah, we chopped around about 185. You trade to all-time highs of 195. But, folks, this is not what a give back looks like, okay? We're back to where we were 3 days ago in the biggest equity in the world. So you better believe that you get your spikes up, folks, because in the short term, yeah, we got some real risk in this market. As I was talking about, when you take a look at the market, you want to see what a healthy pullback may look like in NVIDIA. 382 brings you down to $153, okay? And all we're talking about is almost right back to where you were trading at in July, up from 86. So yes, this market is coiled right now near highs. So NVIDIA is off about 4% right now. Intel, they were in the green. Nice run to $39 and change. We're down by 2.8% right now. On a daily basis, that's an uptick in volume, to put it lightly. AMD's been on quite a run. We're down by 7%. Whew. Tesla shares. So this line here on the top portion, that's the high from 2021 on Tesla. Okay, we hit a high of about 414.50. We're just under that area right now. On a weekly basis, yeah, it looks like we're not even going to accelerate on Tesla. So that's what you'd like to see. You'd like to see it backing down with lighter volume. The daily's going to have some volume, but on a weekly on Tesla, we're backing down with lighter volume. Yeah, we did 522 million shares last week, and that was a banger week for Tesla. All right, this big day you had up here, a couple days, their deliveries disappointing. And, you know, at the same time, this would normally be flipping out the stock market, which is remarkable. Okay, just the government shutdown would be flipping it off, as in the market would just be freaking out, okay? That has almost nothing to do with what's happening in the market, right? Meanwhile, the layoffs are going to begin, and they're going to matter, folks, in the economy. All right, you're talking about millions of employees, so we'll see where it goes. But yeah, RIFs have begun and are substantial. So we'll see where that one goes, but you're getting that one hitting at the same time. Health and Human Services employees across multiple divisions, reduction in workforce, that's the RIF notices. Well, it's not a direct consequence of any party, folks. They can't make an agreement. It doesn't mean people have to get fired, but of course each side's blaming each other. So HHS under Biden became bloated. This is the department saying, growing its budget by 38%, its workforce by 17%. They were all designated non-essential. And the AFL-CIO says, we'll see you in court. All right. Government is the art of compromise, folks, even though right now that's hard to see in the political environment. So no matter what you hear out there, that is the art of governing, is compromise, because there's differences in government, and that's how it works. So each side ratchets up the tensions, and that's not even hitting the market yet. And that may hit the market at some point, but not yet. And with that in mind, we are actually going to get the CPI data, which is interesting. I had that one up there. Excuse me. We are. So they're bringing back the BLS for the inflation data. And what this has to do with is that the inflation data matters. You know why it matters, folks? Because they need the cost of living adjustment by November 1st, okay? So you can decry government all you want. You can decry the BLS, but there are millions, if not billions of dollars that rely on the true nature of the inflation estimates that drive, whether it's inflation-adjusted bonds, okay, whether it's inflation-adjusted cost of living for Social Security. So they're bringing back the CPI portion of the BLS, and you're going to get that delayed a bit. But that news out there, they're coming back. They're going to work on the CPI, and we will get the CPI because they need it. And they need it because there's many government instruments, including, okay, Social Security, which gets that bump. And so we were supposed to get that data. I think it was October 15th. Let's see. And they push it to October 24th. Yeah, so September CPI, October 24th. We were supposed to get it October 15th. That number is now going to come out October 24th. That is 2 weeks from today. We'll get that CPI data print. No other releases will be rescheduled. Okay? So, yeah, the reason why they need this, Social Security is going to make the cost of living announcement on October 24th. And this also ensures that the Fed's going to have that data when they come in October 28th and 29th. The government uses third quarter CPI data to determine the annual cost of living adjustment for Social Security recipients for the following year. They need that by November 1st, so they're bringing them back. So we'll get some CPI data 2 weeks from today. We take a look at yields. We got the 10-year right now, 4.06. Check out the dollar. 98.59. Ooh, gold getting another run. Look at this. Gold's up by $60. Wow. Gold's up $40 from where we were at 1 o'clock. Trading at 4,032 right now. Weaker dollar helping gold extend in the afternoon, up by 1.5%. And the market with a slight bounce, but NASDAQ right at 3% on the dot right now. We jump around to some of the gainers. So Pepsi up by 3.9% over there. We talked about O'Reilly. Up by 2.7%. AutoZone in the green by 3%. We jump around to some retail. A little bit of a safe haven for Walmart. Up by 1/3% right now. Holding on to the gains. Target, not the same deal. Target's not a safe haven. Down by 3.8%. Yeah, TJX. Look at this. Whew. I've been talking about this. You're looking to get in TJX. I wait a little bit lower for the bottom portion of that channel line. It's about a 5-year channel line. And we jump over to Mickey D's as we almost touch the bottom of that channel line. Mickey D's up by 1.1%. Speaking of safe havens, that's pretty close to a bounce, folks. You're looking to get into McDonald's, pay attention. Okay, see how close we got to that channel line? We did it again in June. You did it back there in December, and we just did it one more time. And on a daily, let's see, on a weekly, yeah, we trade lower on volume. Jeez, look at this week. We got no volume at those lows. Look at that. Mickey D's. No, that's last week. Okay. Markets at session lows yet again. S&P's off 162 points. One more segment. Coming back, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And yeah, we just hit tick lows as I came back, folks. NASDAQ 100 off 3.3% right now. S&P's off 2.6%. Man, we're going to go from a 6,800 handle to a 6,500 handle by the end of the day. How about that, folks? 6604 right now in the S&P's. Dow off by 833 or 1.8%. Talking about some of the wage data, okay, and this is just Googling during the break. This is from the BLS, okay? So it's from the BLS.gov website. This is median weekly earnings of full-time wage and salary workers by sex, quarterly averages, seasonally adjusted. Now, the total's in the middle here. Men make more above. Women are on the bottom here. The total, basically average, is in the middle. And right now, folks, we have a weekly earnings of above $1,200, okay? And yes, that doesn't mean you're making up for $5 McDonald's fries, okay? I'm not making the case that it is not expensive right now, because it is. But the wage growth has been dramatic, folks, okay? First quarter of 2021, you're up more than 20% on wages over the last 4 years. 20% on wages. That's from 2021. All right, you go back to where we were in 2018, you're up 25% on wages. 25%. This is the median. Okay, you went from making $900 a week to making $1,200 a week. So even if you take it where we are after COVID, Okay, when you were at, 2022, you're at 1,048. Keep it in mind, folks. People are making a lot more money, and you don't have to go back that far. All right, you go back to 2015, wages are up 50%. Who thinks that wages are up 50% from 2015? They basically are, folks. Okay? All right, watch out. Keep those spikes up. Listen, in the short term, folks, get some stops in this market, okay? We have had an extraordinary run, and we're seeing some decimation today. Get those stops, abide by them, and there's your 6,500. Didn't take long. We're finishing at session lows. Folks, thanks so much for tuning in. Listen, we're all in the market every day. Get out there this weekend. Enjoy it. Have a great weekend, folks. We'll see you back here on Monday morning. Thanks so much, folks.